Well, is gold a good investment? Are Gen Xers failing at being ready for retirement? Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon, this is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Listen, if you got a question for me, I want to invite you to go to the website. Check it out. Lots of information there, and we've tried to build it into a resource. And there's a very important link at the top of the web page that says Ask Prudent Money. Click through, and you can send your questions in. I do answer every question that comes through that portal. And if we can be of help to you, I always have an opinion. Now, whether it's right or wrong, who knows? But do have an opinion. I'd love to share that opinion with you. That's all at the website, www.prudentmoney.com. Also today, I'm going to open up the phone lines. If you've got a question, feel free to call in. And you can, if it's something different than what we're talking about, that's okay. We can always go back to the subject before the phone call. So 1-877-913-5357 is the number to call, and do have a line open. Well, getting a lot of questions about gold, which we'll talk about here in a second, but also getting a whole lot of questions about the government shutdown, what it really means. And so what I want to do is address that today. And we've got a lot to talk about. If we don't get to it, we'll get to it later. But do have a lot to talk about. Let's talk about the government shutting down first. First, you have to look at it from the standpoint of how does this affect employees. And we're going to talk about this from a lot of different angles. How it affects the stock market, how it affects the markets in general, the economy, but nothing, and I don't want this to be taken out of context, nothing is as important as what some government employees a lot of government employees are going to go through, which is either working and not getting paid or being furloughed and not getting paid as well. And this can cause a lot of problems on employees, government employees. So we want to make sure we keep that in mind and keep our prayers going that this thing gets done quickly. But in true political faction, I don't think that's going to happen. So we want to gear up and kind of understand what's happening. The first one is the furloughed and essential workers. Employees and agencies or programs that lose funding are often furloughed. That is, they are put on leave and do not work during the shutdown. Some employees are classified as accepted or essential, and that's going to be employees that their work is critical to safety, protection of life or property, and other vital functions. Pretty obvious. They must continue working even through or during the shutdown. And then those accepted essential employees typically do not get paid during the shutdown, though in practice, Congress does take care of that, and they've passed legislation that takes care of that. Today, I believe that it was this morning, I heard President Trump threaten that there was going to be a lot of people who won't get paid even when the government shutdown stops. Apparently, that's not true. Can't do it. I think he's still getting a little familiar with some of the laws. But government employees that are not getting paid right now should get paid. Services that continue versus services that pause. Activities that are mandated by law are already funded through multi-year or indefinite appropriations. Others continue, and that would be things like Social Security, Medicare, Medicaid, and other entitlement programs. Emergency public service safety services are almost always maintained because they're there to protect life or property. Non-essential services such as many administration functions, parks, museums, permitting, regulatory oversight, or research programs may be suspended or scaled back. So what, this, as you hear of all of these government employees who are not going to get paid, first thing that comes to my mind is, what about the other set of government employees? The ones that we vote into office, the politicians. What happens to the politicians? Do they not get paid, or a delay in their payment? Don't worry, they still get paid. Well, what if, I always thought about this. This is too much to talk about today. But what if politicians had 4-year terms, like the president, retirement benefits, and health care like the rest of us? Would they vote differently? Because you see, this is all about the problem that the Republicans and the Democrats can't get on the same page as far as how we spend our debt. And about half of what we spend each year is debt, and the other half or so comes in from taxes to run the government. So when does this start to affect the economy and the stock market? Now, as you probably have noticed, the stock market has just continued to go up and continued to do exactly what it was doing before the government shut down. And I think a lot of that is because they expect it to get taken care of. They expected not to go to ridiculous extent, timing and in months of being shut down. I don't expect that either. That's going to happen. But there is an interesting set time period of 35 days, and I call it the 35-day factor, because that is back in 2019, the end of 2018, the beginning of 2019. That was the number of days, 35 days, that the government shutdown lasted. And that, as far as I know, is the longest on record. I would imagine if we got near that number or beyond that number, that the politicians would start to feel that pain a little bit and get them motivated to come to a deal. But it's so, with the Trump, I call it the Trump factor, the negotiations that he takes place in, it's really tough to determine exactly how he's going to take and lead these negotiations. And they're getting absolutely nowhere. And it's kind of one of those things where they drive the car to the ledge just right to the point where it could fall off the ledge, but it doesn't fall off the ledge. And then they pass something. I mean, it's all about, and I've watched this for decades. The politicians, when they get into the negotiation, arguing phase of government about how money's going to be spent, it's always a situation where they pretty much get what they want out of the situation, but at the same time they both save face. So in politics there's never a loser obviously there's when you vote, but once they get into office, it's all about saving face. And the problem here is they expect the unexpected. And I heard somebody say this, and I thought this is so true. The market is so overvalued, is so high, and people are just throwing money at it. And we'll talk a little bit about this here in a second. There's no room for error. The economy is walking on a tightrope. Anything that could go wrong could set up what I would call the bursting of the bubble. This is something that we talked about on Prudent Money back in about 5 or 6, 7 months ago, is that if the Federal Reserve Board were to cut rates and produce any stimulus into the economy, then that the stock market would take off and would form. Actually, I believe the stock market is already in a bubble and has been in a bubble for a long time. And what I mean by that is that it grows and grows and grows to the point to where it gets so overvalued that there has to be a process at some point where the bubble bursts and things come back to normal, and you lose all that excessive valuation, and stocks are priced where they should be. We are so very far apart from that. Last time that we saw that, we've seen it since 1999. We've seen this twice. We saw a bubble in real estate back in 2008, and I would suggest we would be in another one had it not been for interest rates taking off and buying real estate really tough. But 1999, we had the tech bust, and I remember that as if it were yesterday, where tech stocks got so incredibly overvalued. And we are today, with AI stocks in the stock market, way more overvalued than it was in 1999. And the stock market went through a terrible bear market, 2000 to 2002, losing about 48%. Do the math on that. And it seems like everybody's forgotten about that. And we're not just looking at a bubble in stocks, we're looking at it in gold, which I'll get to on the other side. This is Bob Brooks. You are listening to the Prudent Money Radio Show. Stick around, I'll be right back. Hello, this is Bob Brooks. Proverbs 22:3 and Proverbs 27:12 are the exact same verse word for word. I call them the stewardship verses of risk. A prudent person foresees danger and takes precautions. The simpleton goes blindly on and suffers the consequences. On the Prudent Money Radio Show, we teach about risk, how to identify it, how to figure it out, and what to do about it. We believe that to be a prudent steward, you have to be a good risk manager. Listen to the Prudent Money Radio Show on Bible School Radio 91.3. Prudent Money, home of the modern-day steward movement.
Hi, I'm Jan Markell, host of Understanding the Times. We're very excited to be a part of Bible School Radio. I hope you will join me Saturday, 10 a.m., for cutting-edge guests and the latest information to help you discern the truth, even the inconvenient truth. We'll help you understand our times and contend for the faith. That's Understanding the Times, Saturday at 10 a.m., right here on Bible School Radio or anytime at olivetreeviews.org.
Your host and teacher of the Invisible War radio program. The Invisible War is the study of God's Word on how to walk in Christ's victory and the spiritual battles we face against the powers of darkness. Join me every Sunday morning at 9, right here on KDKR and KYJC in Commerce, your station for life.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thanks so much for joining me today. You know I do appreciate it. If you got a question for me, two ways to get an answer. First, you can go to prudentmoney.com, go to the top of the page. There is a link that says Ask Prudent Money. Send it in. We'll get you taken care of. That simple. Second way is you can call into the program today. I do have a line open, 1-877-913-5357. 1-877-913-5357. That's the number to call, and I do have a line open. So I was talking about the bubble in the stock market. And of course, the most famous bubble, which has been the biggest bubble of all, and we'll see what happens with this one, is the one in the 20s in 1929, where the market lost, true story, 86%. The Dow Jones Industrial Average, which was the stock market at the time, lost 86% between 1929 and 1932. Unbelievable. And it took something like 27 years for people to get their money back. Now, I don't think that's going to happen, and by any stretch. And today is a lot different than 1929. I studied a lot of history of that particular time period and what happened and what went wrong. And it's the only thing that's the same as today in 1929 is the problem with emotion and people getting mixed up and making decisions to emotion. And there was no regulatory guidance. There was a Federal Reserve Board, but it didn't have near the power that today's has. And there was no SEC, so there was nothing there to regulate stocks. And it got completely out of control. So if you kind of read the narrative as to what happened, you could see, you definitely could see it happening. But what will be interesting, so let me back up. So we're a lot of overinflated investments, bubbles are we're seeing right now. And as usual, most people are discounting it as, oh, it's no big deal. It's different this time. So whatever I always say, I wonder what it will be that will throw everything out of balance, that will cause the bubbles to burst. It'll always be something that we would end up saying, I didn't see that coming. So we'll see. It's never. I don't think it's ever anything that anybody predicts. I think it's just something that just comes out of the blue. But the problem is, like I said, where there's no room. Well, like I said, I copied this from somebody this morning. The gentleman said there's no room for error, and I think that is so true. October 15th is an interesting day because that is a day that the military should get their paychecks. Now, you don't think that puts a little bit of pressure on the politicians? We'll see, but I will keep you posted as far as what's happening there. 1-877-913-5357. 1-877-913-5357. Had a question come in, and of course, this is in the markets is a big subject. Once again, it's gold. Another, maybe almost a bubble, not quite a bubble yet, but definitely heading to that destination. The question came in and said, I am considering investing in gold. I currently have an IRA with a 50-50 stock to bond split. What are your thoughts about investing in gold? I appreciate any information provided. I think that you have to ask the question, if you're going to invest in gold, what is the reason I'm investing? Now, the last couple of days, I've heard there's so much anxiety and fear as to what's happening in this country, and once again, the market's way overvalued, historically overvalued. And the guy on CNBC says, "Hey, we need to people are taking safety in Bitcoin and gold." And when you start to hear stuff like that, stuff that's so crazy, Bitcoin is so far from being a stable asset. Gold is not a stable asset either. Regardless of what pop culture finance wants everyone to believe, those are not stable currencies. In fact, I wouldn't even go as far as saying that gold is a currency. It's not like Bitcoin that can be used as a currency. So what's the reason that you're wanting to invest into gold? And if the reason is I want it to be a hedge against a loss, against the fear and the anxiety, I just think that there's other reasons why you'd want to invest in gold than that. And I know that goes against, it's a contrarian opinion, contrary opinion. But the problem with gold, and why I don't believe we'll ever go to gold as a currency or to back up the dollar or whatever, is because it's not trackable by the U.S. government. And the reason the government loves the idea of digital currency is because they can track it. And they looks like today they can't track the currency, and that's one of the big I assume, I speculate that's one of the big reasons why that they're wanting a new currency. The digital dollar, which is produced by the Fed, seems to be the most reasonable replacement for the U.S. dollar. When all this happens, who knows? But at the rate that this country's changing, it wouldn't surprise me if it was sooner rather than later. So I don't see, if the country goes into turmoil, how are you going to monetize a brick of gold? Maybe a gold coin? I don't know. But just keep that in mind. From the standpoint of using it for diversification, that's very reasonable. Except that I see people throwing all of their retirement assets towards gold. I wouldn't do that. And unfortunately, you have people on financial television that are allowed to be advertisers, and they're advertising gold, and they're saying, just you can put your whole IRA into it and be a gold IRA. See, people have a misconception about gold. They think it's a very safe investment that and is stable. If you look back at the history of gold, you'll see time periods just like stocks where gold lost 30, 40, almost 50%. It had a lot of trouble during the financial crisis, and the problem is that what goes up and forms a bubble, when that bubble bursts, it comes crashing down. And so you want to be really, really careful. Another thing that you could do is, instead of buying physical gold, I know for a lot of people this defeats the purpose, but you could always buy the exchange traded fund, the ETF, which is for gold, which is GLD. It's an investment that tracks the price of physical gold. And reasonable allocations, 5 to 10%. I know that's not a popular opinion, but I do believe that there's so many aspects of gold that you really have to look at and come to a conclusion as to what you think of it as an investment. Right now, I would call it a very speculative investment. Of course, it really comes down to what investors think and their opinion of gold is. And there's a great book that's very old. It's written in 1954. It's called The Art of Contrary Thinking, by a gentleman named Humphrey Neal. I think everybody who invests money should read this book. And he talks a great deal about bubbles. He talks about if everybody thinks a certain way, and I'm going to get this wrong. It's a quote. Then everybody is wrong. And he talks about what the masses do and how they invest in different investments, and they take them way beyond their valuations of what they're worth. We saw it during the tech boom, which was 1990, 2000, when everything really came to a head. We saw with real estate. There was in the 17 or 1800s, I can't recall, was the tulip bubble, believe it or not. There's been art bubbles. I mean, there's been all kinds of things. But if you get a mass of people believing in one thing, they're all going to participate in it. I think that's a lot of what you're seeing in gold. Now, gold is considered a hedge against all the fear and anxiety that's going on in the markets, but just be careful with it. If you got any questions, you're welcome to go to prudentmoney.com and send them in. This is Bob Brooks. You got a question for me, please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time. Keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.